Hello and welcome to another Trades and Tutorials video. In this video I am going to take a look at an ETF that I think you should be focused on right now for two reasons. One, it could be a leading ETF if the market moves higher, and two, it could be the ETF or one of the ETFs that gives you an early indication that the market is going to move higher. But before I get into that, let me just make sure that if you're just finding us on YouTube that you do subscribe to our channel. And also I want to make sure that you know that you can see this video in HD by changing the settings in the lower right hand corner. Just click on that little gear looking icon and you'll see the selection for HD. It'll be a lot clearer and I think you'll like it much better. So on to the video. The ETF I'm going to focus on today really quickly is XLF. So XLF is the financials, big banks, and there's a relative strength pattern here that is making the XLF interesting on two levels. First of all, when I say relative strength, what I want to point out is that in the lower chart here, I'm looking at the SPYs, and as you can see, the SPYs since about the middle of May here have not been able to make a new high. On the other hand, the XLFs since the middle of May have made one and then two significant new highs. Now granted, they're coming from somewhat of a lower level than the SPYs, but the time where it really gets interesting is when we look at the point at which the SPYs really tested their all-time high right in the middle of June. At the same time, the XLF made the same test, and that's really where this line that I have, the horizontal line, begins in my mind. So that horizontal line illustrates the fact that when the SPYs came back up in the middle of July to test their highs, didn't make it, but XLF did. Now, the whole market sold off, so it's not surprising that XLF sold off right with it. But XLF did not sell off as much as the overall market, and now it's challenging the prior highs that it took out. So the level that I've got highlighted here as a horizontal line is a really key pivotal level. Now, it just so happens that today the market's still open and the market gap lower because of China devaluing the yuan, and that's pulled the whole market down. And this may actually be an opportunity for the bulls to prove that that move by China isn't going to rattle the markets. But we don't really know whether or not that's going to be the case, but what we do know is that we can watch the stronger ETFs. And so right now the XLF has demonstrated strength by making a new high. It's demonstrated that strength is good by not selling off nearly as much, and demonstrated it again yesterday by breaking back above that swing level, which on a relative basis would have been this level in the SPYs. So net, if you look at the way the XLFs are trading, it's making more progress to the upside as the SPYs continue to churn. And for that reason, if you focus on the SPYs and if you focus on XLF and it starts to trade back up near this 2550 level, that would be good reason to believe that the SPYs may be trying to trade their way higher as well. So you can see this, or you look at this as a potentially leading indicator. And in addition, if the SPYs do trade higher and the XLFs break out, XLFs is going to be a good ETF to focus on the long side, because it will be a leading ETF breaking out, and it's the financials. So a rally that at this point in the interest rate cycle that is led by the financials would be a very constructive rally. All right, so how do you put that into action right now? Well, if you're a more nimble trader, you may actually consider an entry in the XLF. It gets back over yesterday's low in a significant way. It's kind of struggling to do that right now. Or if you want to wait for a little bit more confirmation, wait for it to take out this breakout high, so the Monday, August 10th high, and then look for the market to continue at that point and not come back down below the low of that Monday. Until then, just kind of wait and see. If the market pulls back, if the whole general market pulls back, then look to see if the XLFs can hold this 25 level. If this establishes a tight range, again, the bottom of that range, 25, with a stop under this level, would make sense as well. All right, so big picture, if XLFs are leading, it's good for the market. XLFs may actually start leading before the market breaks out, and if that's the case, I'd have more confidence in a breakout of the SPYs. All right, so I hope that helps. I hope that shows you how you can use certain ETFs as indicators as well as good trades when everything's going in the right direction. Thanks for watching, and I'll see you in the next video.